Hello, traders. It's 8:04 a.m. Chicago time on Thursday, the 20th of December, 2018. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Yesterday was exhausting. This morning, the sentiment is still risk off. We got as high as 25.18 in the S&Ps. We closed at 25.04.75, something like that. And we pushed through the low, which was 24.89.50 to 24.76 and a quarter. Markets tilted to the sell side still. Crude oil's off. Crude oil is the big loser this morning, down 3.22%. Crude had a bit of a rally yesterday after the ahead of the Fed, and then sold off, but still held pretty good prices. I mean, it closed higher than it opened yesterday. But it's off today, so down 3.2%. The Euro Stoxx 50 down 1.83. The DAX down 1.62. The winners this morning are the safety assets, really. The euro, money's run over to the euro, 0.7%. The yen, 0.65. The cable's up 0.38. The bonds are up 28 ticks since yesterday's settlement. Gold is up $4.50, 0.36%. So clearly, risk off continues, and it makes sense. You may not know this, but stock markets around the globe have been struggling since that February sell-off, since the beginning of the year. This is more of the U.S. catching up due to the announcement yesterday. Looking ahead at what we should expect for today, really we got Philly Fed earlier in the U.S. We had retail sales in the U.K. And a few numbers out of Europe. And ahead of us, we have the 10 o'clock Eastern. We're getting leading index for November, expecting 0.0. And that's it for the day in terms of releases. Okay, so not much ahead other than the leading index a half hour after the open. Before we move on, I want to remind everybody that this is the last Trader Bite until next Wednesday. I'm traveling tomorrow. I'm gone Monday, and I'm gone Christmas Day. So I'll be back on Wednesday with the next issue of the Trader Bite. So let's review what we expected yesterday. Not that it matters, but it's still a habit, part of our routine, and routines make us what we are. Yesterday expected a push-up. I expected responsive buying as the primary scenario towards 25.70, and then for the market to roll over and sell off into the FOMC. The secondary scenario is a drift down towards the close. So yesterday we had the point of control up top, and we had the close down below. So given that it's an auction, I expected to move back toward the point of control first, and then a drop. Otherwise, it's likely to move towards the close and then bounce back up until the FOMC. Total garbage in terms of scenarios, but that's expected. I mean, this is a major release, and so it's likely to do all kinds of things. Now, we did get the responsive buying into the point of control right here, okay, and then it chopped around, pulled back to the mid, and it ended up actually pushing through the prior day's high ending the one-time framing down that we've had.
About 20 minutes now, 20 minutes from the U.S. cash equity open. Equity futures are now largely flat in the red.
So that
still holding above the electronic overnight low of 24.76 and a quarter, and the S&P mini hovering right around 2,500.
25.92, and then
markets in Europe are predominantly lower, down about 1% or more.
Very, very wide range.
To the Fed statement and press conference yesterday, we saw money come out of stocks on a global basis. Come out of risk assets, including most commodities. Copper futures are down again. Crude is down again, down about 30%. WTI crude.
Right into the gap
a little bit of delayed reaction in the dollar. The dollar sold off through the latter part of the Asia and into the European trading session. 114.60 now in the euro, up 80 pips off session highs. Still up about 0.75%. Cable up 0.5%.
Yep, September 11th.
Interest rates.
And we went right to the middle of that gap before we bounced.
The curve has remained flatter.
Is 24.90. We went to
24.89. 2.75. 2-year
before we bounced up.
2.66. So the 2 10-years right now dropping below
kind of a sidebar here
points.
for a second.
The 30-year below.
I got to say,
90
out of transparency, this point of
closing
this
in on 296 now. The flattening there in the U.S. curve is extending following the FOMC announcement yesterday.
See what did we expect and what actually
trade
happened.
News Singapore out of Washington
and
Post
then we carry that forward into the narrative for today. And I got to say, yesterday was just one of those days where the market,
activities,
as I've seen in my career many, many times, provides a humbling reminder to be picky, even in the high volatility. I mean, there were some 14 to 20 point scalps yesterday, meaning moves that would take just a minute to cover that. And what I ended up doing, I'll show you a little bit. See if this is useful to anybody. I'll zoom out to show you what's happened in the order flow. So this is my action here. Those triangles, blue, pink, blue, pink, blue, pink, blue, pink. Those are my trades. The dots, those are orders that that remained unfilled. Just a lot of activity in this Fed move, tons of it. And it's just, I might as well have not traded it. Really, it's just make a bunch of money, lose a bunch of money. Make a bunch of money, lose a bunch of money. And I could not tell you what it is that I was after. Because in this situation, when it starts moving this quickly, I noticed yesterday that I go back to being just a high-volume scalper. It's almost like my my little addiction. And I forget that actually this is an auction and what is driving this auction. And I can tell you that what's driving this auction is not your awesome fibs and levels and all that stuff. When you have OTF stepping into the market, you're dealing with forces that are based on mass psychology, and money's moving in and out, not because there's a fib there, or there's a stock zone there, or a decision zone, or an anti-zone, or whatever you want to call it. It's because money has to flow in certain directions. Money's being protected. Other exposures are being hedged using futures because they're capital efficient and leveraged. And it doesn't matter what your stock zone is. It doesn't matter. There's a big confluence here based on a prior low and a mid of a prior session and a high of a prior session. It's just nonsense. It's nonsense. And, and it's just reminded me today that I can't sit here and try to scalp these big moves, which I did. And I like it. It's my game. It's my thing, right? I have very comfortable in the low liquidity, high volatility arena. This is why the DAX was where I made most of my money in the past, and it's just very quick. You know very quickly where you're wrong or where you're right. However, the reminder here and the point I'm making is Still in this environment, you have to remember the auction. Still in this environment, you have to remind yourself, what is the time frame that is in control? Who is in control? What are they trying to do? How good of a job are they doing? And so on. What have they done? What are they trying to do? How good of a job? And then I could have positioned myself much, much better, traded a quarter of the trades and returned 10 times what I could have. Okay. And so it's just a reminder here that the market's going through a transition. This is a very important, what we're seeing is a very important structural change in the market. And because it's an important structural change, there are some adjustments that we have to make
CCL
that we can't be bound up in the same plan we had
70 cents for earnings
from last summer. Now I'll go back to
4.46 billion in revenues, about in
2017
line with
to the
expectations.
same area we were trading in before. Here's where we were trading before. I'm not going to change the scale.
AMD to
This
be
is
added
the
to the
same
NASDAQ
scale.
100 index,
Okay.
alphabetical delta.
All right, let's clean this up. And I know I'm taking a lot of time here, but look at these bars. These are days. Each one of these vertical lines is a day, is a trading day. Look at these bars. Okay, this is June, July of last year is when we were here last time. Okay, look at these days. Look at how compressed they are. There's a lot of information. There are a lot of stock zones and levels, and you can see the naked points of control being extended
Carnival
out.
based on current booking
And then
trends,
look at
saying company
yesterday.
expects full year 2019 constant currency net cruise revenue to be up
Here's yesterday.
5.5%, capacity growth
Look
of
at the day before that.
4.6%.
Look at the range. I'm not changing the scale. I'm just simply moving up. Look at the ranges that we've been seeing
Full year adjusted earnings
versus the
seen
ranges
450
that
to
existed
480,
the last time we were here. Okay,
actually 469
look at
consensus.
those. Very small. 15, 12, 15
Charlie
points
Lima.
per day, 9 points. So there's this thing that we have to do as traders, and that is to continuously deal with the fact that the market's adjusting and it's changing. And I just wanted to kind of go through that a little bit. So just remember, you have to adjust to the market. It doesn't have to adjust to you. And at the end of the day, you're trading an auction. So we saw how we ended up, neutral extreme down. Very wide-ranging day. Here's what happened after the close. The market opened, pushed down, pulled back to 17, plummeted during the Asian session to 76.25, and has been rising since then. We've just pulled back to the mid of the session. We have a profile that looks like a P but isn't. It's a multi-distribution profile. The market's actively auctioning up and down prices. The volume is about versus current volume is about twice the most recent volume, expected volume, and also the roll is almost completely done. So I'm pretty much back to trading with the delta. And volume is still going to be impacted. It's still going to be impacted by the fact that about 20% of the roll volume has to do with hedging and some other actions that need to take place before tomorrow's expiration. Tomorrow's quad witching Friday. Today is the last day to roll. And so there's still some activity in the market that is somewhat unorthodox or doesn't make sense, so to speak, because we are expiring. But for the most part, intraday, we can use the information that we have on the March contract to trade it just like it's complete at this point. So that's the review portion. I know that was long. Again, I'm not going to be here tomorrow. Let's take a look at current action. The expectation for today is your guess is as good as mine. At this point, we are in some really unprecedented territory in terms of the speed of this move down. We're down about, I don't know where we are. I think 15% maybe from the all-time high, and very, very quickly. So the market's really there's the things we need to keep track
Prime
of, or
Minister May
keep
saying
reminding
ministers are
ourselves is
clear that we're
that all
focusing
time
on
frames are
getting a
active
Brexit
now,
deal through Parliament.
and there's a lot of push-pull. You have to keep an eye on treasuries. There's a lot going on there. There's a lot going on in gold and so on. And so, to me, this has not lifted off really from the high volume node put in from the balance that was discovered yesterday at the low around the 2500. We keep moving, shifting up and down, up just above 2500 and below. It's not made a very good attempt. We did rally into the European Open and since, but we had dropped quite a bit before that. We're ending up opening just below where we closed yesterday. Looks bearish to me. To me, I'm still looking at selling any attempt higher. Very, very cautious with these stock zones. Don't let them deceive you. The stock zones are built on intraday as well as intermediate term time frame levels or features in the auction and the price action. So I'm looking to find areas to sell short, looking for an extension. The reason I'm looking for the extension is because this is clearly an impulse down, looking for this to resolve itself to the downside with the stock market being open, likely to push through into the 70s, 60s below, and then looking for a bounce back up for a return to 2,500 by the end of the day. We tend to not break through century figures and just continue. It's rare that we just power through 2,600 and just continue. We tend to get stuck there. We tend to build a high volume node somewhere around the century figures. Okay, your guess, as I said, disclaimer, your guess is as good as mine in this environment. I'm not going to sit here and pretend like I have statistical studies that show what is the propensity of the auction after a 100-point day in the environment that we're in. That's a joke. I don't know. I'm not going to be another pundit on TV like the guys on TV trying to explain what's going on. I think the Fed doesn't even know. So, well, maybe the Fed never knows, but the alternative is it opens, we drive down, and we continue our drive lower. So it's an open drive or an open test drive. The third scenario, it would be the surprise, and that would be the open test down.
Prime Minister May saying the
and then drive
way to
back
prevent
up.
a no-deal Brexit is
okay,
to
there's
vote
a single
for
print
the
at 25.19, and it goes up to 25.35, and that would be the area to watch on the rally. 25.19, 25.35, dangerous area in there to short for a structure. It's likely to walk right through the singles, but that's what I would look for on scenario 3. I am going to be a scalper today. I'm probably not going to see structured setups because I just don't have the information to back that up. It's probably wise not to trade. The volatility is expected to continue to be high. It's better to protect your account so you can trade what's coming. Volatility is likely to continue to remain high through January. January is probably going to be a pretty crazy month, so we'll see what happens. But today, take it easy. Take it easy. Probably today and tomorrow, take it easy. Be good to yourself. You don't have to trade. Okay? Good luck.
Note on the short-term budget agreement in Washington, seeing some additional reports echoing yesterday's reports out of the White House, suggesting officials there are uncertain as to whether the president will sign the stopgap spending bill or not.
Trade NQH9 at S5 by 23.
Seconds to the opening bell in New York.
Trade NQH9 at S5 sell 23. Trade NQH9 at S5 sell 21. Trade NQH9 at S5 sell 30.
follow up to the earlier Washington Post report about U.S. and allies planning to accuse China over economic espionage. CBC's White House reporter saying that officials there are not waving him off the story, indicating that it is accurate. Further reports saying Justice Department will unseal charges against Chinese government-linked hackers later today. Now reports that DOJ will be holding a press conference on this issue later.
Trade NQH9 at S5 sell 33. Trade NQH9 at S5 by 26.
Report that EU governments agreeing to impose CO2 caps on trucks for the first time.
Trade NQH9 at S5 by 21. Trade NQH9 at S5 sell 30. Trade NQH9 at S5 by 27.
10 minutes or so into the trading session, the Dow down about 90 points, the S&P down 7, the NASDAQ composite turning green. The transport's up about 0.1%, and the Russell 2000 down 0.1%. The U.S. 10-year yield holding just above 275, the 2-10-year spread holding right at 10 basis points, with consolidated and added to the flattening along the U.S. benchmark curve into the 30-year that we've seen in the wake of the FOMC announcement yesterday and press conference. Gold futures up about 0.5%, and crude trading down 3% still.
Trade NQH9 at S5 sell 21. Trade NQH9 at S5 sell 48. Trade NQH9 at S5 by 30. Trade NQH9 at S5 sell 26. Trade NQH9 at S5 by 21. Trade NQH9 at S5 sell 34.
S&P 500 cash moving below yesterday's low.
Trade NQH9 at S5 by 54. Trade NQH9 at S5 by 28.